First of all, I've been with IDC for less than 6 weeks, so this is officially my first IDC keynote, so let's hope it goes okay. But having left Accompanies, I had the rare opportunity of taking a system which relied largely on complex rules, interesting rules and rules that worked, but that couldn't take in enough data and couldn't make accurate enough decisions as the market changed, and moving that into AI and wildly failing and then not failing. So I'll talk a little bit about some of those experiences as we go through this presentation. I will talk to you about why AI in financial services, but I just want to do it by showing you sort of a real world scenario. This actually happened. It probably has happened to a lot of you. And in walking through this scenario, I will show you why financial institutions today really have very little choice other than to begin to move into AI, albeit in sort of a phased way. Before I tell the story, I will say this. If you were to ask anyone in a financial institution why they would even consider AI, considering it's so difficult to have data and deal with regulators, they would tell you two things. One is the operational cost of running a bank in every single division is so high and consistently growing by upward of 20% a year in full-time employees and time and resources. The next thing they would tell you is that the regulatory compliance requirements that they have to abide by grow and expand across every jurisdiction every year, and all of this requires more of that operational expenditure. And then the third thing that they should tell you, but they probably won't, is that the customer experience in banking is so sorely challenged at a time when financial technology companies like Facebook enable you to move money and do business in ways that are not challenging using AI. I could close the presentation here and let you know that financial institutions will move into AI. But let's talk a little bit about how and where it will work and where it may not work. Okay, so I just want to start, this is a true story. So this is my teenager. It's actually not, because she made me pull the thing out, but her actual picture, but she does have tattoos, so I just figured we'd start there. Okay, so she came home looking like this, and she was all confused, and I asked her what the matter was, and she said, came home from my dog walking job, and this lady gave me this, and I feel like maybe she's trying to cheat me. And I was like, no, she's not trying to cheat you, sweetie. That's a check, and you need to put it in the bank. And I said, here's the deal. I'm sorry, I'm a lax mother, sorry. I should have taken you to the bank a long time ago and helped you open an account, but that's what's gonna happen. We're gonna go open you an account, you're gonna put your check in, and in a couple of days from then, you'll have your money. And she goes, no, Mom, that's not gonna happen. I have a better idea, she says. I'll give you the check, you put it into your account, you zap it to me on Venmo, and then you'll have it paid back in a couple of days. And I was like, no, that's not gonna happen either. So this is what happened. We went to the bank, there's my snarky analyst picture and my fake daughter, but this really did happen a few months ago. And the first thing they did was to ask us for physical identification, which kind of makes me laugh because I live in New York State and we don't even have the biometric card yet. So there's so little they can do with physical identification, but okay. And then they were gonna run 2 credit checks. One was gonna be on me and one was going to be on her. And there's 2 things I noticed about that. A, they were gonna run a costly credit check on a kid who had no transactional history. And then they were gonna run one on me who's been a customer for 10 years. And then the best part of it was that they were gonna do it manually. And so she's sitting there typing the stuff in to get my TransUnion and my blah, blah. Oh, and then the best part is I said, oh, don't bother with Equifax, okay? Because it's been hacked, so it doesn't matter. And then she didn't get it at all. So then she went to check my account history, which, as like a data scientist, as a former data scientist person, I was so upset by because she didn't realize that she was only checking one stream of my data and she wasn't looking across all of the ways in which I engaged with the bank. So actually she was not getting a true assessment of who I was anyway. And then finally she was going to do this KYC check, which she had to sit and enter in all the information and then run this like fuzzy matching thing. And then I asked her if she was going to get negative news about me, and she didn't know what that was, but that was fine. And then basically what happened, this is all semi-manual. In some parts it was totally manual, and in some parts it was semi-manual, where like as a human she was directing the machine, and then the machine went out and did some automated things and reported back to her, but it was very rudimentary. By the way, this was a global institution. Just want you to know. And an hour later, she did have an account, which is pretty good. It could have been way worse than that. And then a few days later, she had her money. She was really bad. And then this is what she actually uses, right? So she uses Cash App for all of her other dog walking clients. They zap her the money. It's owned by Square. It takes a second, literally, to create an account and a second to zap someone money. To be fair, the creation of that account is aligned with an already existing bank or card account, so someone else already did the due diligence, but it's still analytics-based, right? They still use data and analytics to understand who you are, to verify who you are, to do some risk assessment and get you moving money. And my kid will go to college next year, and then she will be the banking consumer of the future, and we are hugely unprepared for her. This is the sort of the bottom line. Okay, so now I'll get a little more serious. Oh, I forgot I have the thing right here, so I don't have to keep craning my neck. Okay, so there are lots of ways I thought about introducing to you how AI will take shape in banking. And rather than take you through all of the different kinds of machine learning algorithms and supervised and unsupervised, and I figured I would sort of take you through 4 pain points. And these are very real pain points. And I won't make you read every single bullet, but I'll sort of talk to you about the highlights of each and talk about why AI for each of them. So healing the customer journey is kind of a serious thing for banks right now. I already walked you through the account origination process. There's something I should tell you about that, which is that most people of my daughter's generation will never open an account in person. They will do it on a digital channel. And when that occurs, you are forced to take on a level of AI and biometrics. So there's that. The voice and text commerce. So my IDC colleagues, I don't know how they'll feel about this because I don't know them yet, but I think it's stupid and I don't care about voice robots. Like, it's just another browser. Ultimately, we need to enable them and they need to work, but it's another browser. Nevertheless, we need to begin to develop them, and that takes some analytics. Intelligent self-service, or the ability to not just call the bank and have the bank engage with you in some sort of reasonable way through robotics, but more importantly, to have the bank proactively call you, to have the bank constantly running analytics on who you are and how you're performing and say, hey, you've spent an awful lot this quarter and you have these 3 recurring bills coming. What are you going to do about this? Do you need some credit? Right? These are things that are not occurring today. And then pervasive payments is a really important thing that banks do need to think about, and that is there's at least a quarter of you in this room that are likely to give a gift this Christmas that has some sort of IoT function, meaning you will give a phone that has a payment built into it. You may buy these GE refrigerators that actually do have payments built into them. And as this occurs, the bank needs to be ready to be able to engage with this payment experience without ever letting the customer know, right? This is when payments become invisible, and we need AI to do that. Okay, so that's all kind of CX stuff. I will get further into this. The last thing I'll say about CX is that as we move into AI, many of the speakers have already talked about making the case for AI, and that is something that is continual, right? And one way that we do that is to show metrics. And one of the metrics that is almost never talked about, we talk about model performance and data integrity, but we almost never talk about CX as a metric. and we will begin to apply the customer experience in banking as a metric of how well models are performing. All right, so operational efficiency, there are about 27 different use cases I could give you here. I will tell you one story. A very good friend of mine runs treasury payments for a Fortune 500, and he said to me, it's crazy. Every time I send, $1 million to another company in China, it goes through 4 different hops. The message is altered. The payment message is altered at each hop. It can go wrong at each hop, and there are no analytics that are looking at the content of that message to say, this is right, this is wrong, here's the likelihood that it's wrong, and it fails for him 40% of the time. So that's and there's financial loss for the bank every time that happens. So that's just one example of operational efficiency that's a problem. Preventing attacks is sort of my favorite thing to talk about, and we'll talk a little bit more in depth about it, but as a whole, everyone in the fraud team of a bank will tell you that they are a data scientist. They're not, but they do work with data, and they do work with analytics, and they do really amazing things with data and analytics, and I'll get a little more in depth to that. In AML and compliance, what we're seeing is this really cool integration of machine learning, dynamic decisioning, automation, but then integrated with RPA. So setting, robots or glorified macros, depending on where you are, loose to fetch data, report back, build it into a story, and begin to collaborate with humans. And the interesting thing will be the interconnection of machine learning, so understanding data, making a decision, creating an action, and then letting that action push forward RPA, so cognitive automation, basically. And that will lessen the amount of time that we do things like investigate false positives on an AML alert, report it, send it into the government, see how it was, accepted, and then report to the regulator. Uh-oh, I'm already at 5 minutes. Okay, so I'm gonna actually skip through some of this. And then the banks will use AI to find new revenue streams. So this whole conversation around how do you make the case for AI in banking, the case will be around setting analytics loose to offer customers new products as they move through their life cycle and increasing revenue stream. Okay, so let me just, okay, so as a whole, there are lots of different ways we can break down the AI universe for financial institutions, but I think what they're looking at today are the best possible ways to look at variety and volume of data. And for financial institutions, this is not to be taken lightly, so they have all this rich data in their core system that tells us how you engage, how you transact, historically and then in real time. So there's a real importance to deal with data in real time, data streaming, event streaming, and the ability to push analytics against this data. And then we need to be able to look at you in all different kinds of ways. So we're taking in third-party data and we're needing to integrate it, we're needing to do it in real time. There are these obvious platforms that look at analytics, and it kind of doesn't matter if you're looking at machine learning, supervised or unsupervised, or deep learning, graph analytics. What you really need is the data, and then you can sort of have as much fun as you want with the algorithms as you go. It's like the 20% fun part after the 80% of data hell. And then you want to be able to enable dynamic actions, and that is occurring in different kinds of ways today. And I want to note that enabling dynamic actions doesn't mean like free thinking, self-adapting, self-learning, everything in the bank. It means narrowly focused strategies with quick wins that you can document and prove, and then later integrate with each other. Meaning, today in a fraud system, if my system sees you as risky, it will send up an alert. And if that alert is high enough, I as the human will have written a business rule that says, sure, go ahead, interdict, stop them. And that is automation, right? And that's obviously much less automation than stopping them, talking to them, making sure it's not them, sending it through to investigations, but it is automation today and it's working. Finally, in banks, you will need model governance at every turn. You cannot have analytics in banks that are not explainable. And I know that the issue of explainable analytics is impossible as you get into deep learning and neural nets. But one of the things that we're looking at is when you invest in an analytics platform or in an AI platform, what is built in that allows you to begin to document as your models are adapted and changed and allows you to report in some kind of way, because the regulators will absolutely ask for that reporting. And they, by the way, also have their own data scientists now who come on site and look at this reporting. And then finally, when we talk about reporting, we often go right to model performance and data integrity. But one of the things that we'll look at, as I said earlier, is the idea of customer experience. So I'm actually going to have a little less time than I realized. So I'm going to skip a few things. I want to just show you one case study that is really important in terms of driving home sort of one key thing here, which is that we will not move to total automation and total analytics. We will move to a combination of human and machine learning. And that's going to be the case for a really long time, even in the most advanced of AI scenarios. So this is a case or a series of cases that are actually true. So financial institutions, you will not find any, including community banks, that don't have some sort of machine learning at this point. And they work, right? They know how to find the one key thing that we all face, which is account takeover. They can see that you're on the wrong device, you're moving a strange amount of money, your account has been taken over, and there's about an 80% value detection rate, meaning they stop it 80% of the time, and it works. But the problem is that fraudsters don't stop innovating, right? That's what they do for a living. And we had a scenario in the past few years that resulted in $12.5 billion in loss, in which fraudsters said, it's okay, I don't need to take over your account. I will convince you, the actual user, to send money to me, a fake beneficiary, and everything about you will have looked right. So I will dupe the analytics. You will do it from the right device, you'll send a right amount of money, you'll do it from the right geolocation. You will not do it to the right beneficiary, but most of the things about you will look right. And I worked with a number of banks who had like sudden and steep losses due to this, and they were completely confused because their algorithms were in like top shape, and they even had an element of self-learning already built in, so like they knew what AutoML looked like. And what happened was we sent in what will be the future of AI in banking, a cross-functional team of data scientists and fraud subject matter experts. And this cross-functional team, which by the way is a little less expensive than a team of all data scientists, go in and do two things. One, will have knowledge of the market to say, hey, there's a new kind of fraud. We've seen it all over Asia and now it's in the US. And data scientists who can take that market knowledge and very quickly change the parameters of models and allow the machines to then get re-automated again and begin to adapt in a new sort of way. And the other thing that they did was created two sets of analytics running on the same data at the same time, one of them using completely unsupervised analytics to go out and find brand new patterns or indicators of risk that could then be incorporated into the algorithms that had now been reshaped by the subject matter expert. It was the absolute intersection of machine and human learning. And then going forward, it was machine automation with human governance, which is sort of the future of where we'll get to in fraud. And I will say this, I know I'm now over. There's a lot more here, and I'm happy to share this. I will say that fraud is the sort of the gateway drug, right? It is the drug that will lead them to invest your stakeholders, your budget holders into more, and that is because it has quick wins. You will stop fraud losses, you will reduce the amount of human hours spent investigating and on operations, and your customer experience will rise. So you will have hit all of the pillars at once and have a really good jumping ground for wider investment. Thank you so much for having me today.